Good morning. Welcome, welcome, welcome. Spencer, Steve, JC, with you on this fine Tuesday morning. I think it's a fine morning. Most things appear to be higher. Good morning. All right. What do you guys want to talk about today? Maybe JP Morgan? Perhaps? We'll see. We got John Salama on the show in about a half hour. Of Kenny Glick will stop by. Phil Perlman will be here for his weekly Pearls of Wisdom segment. And it's a good day. My question is, when Dow 50K? Soon? Imminent? Tomorrow? The next day? I don't know. If you're watching this on YouTube, do me a quick favor. Hit the like. I appreciate that. Thank you very much. And I got the guys here, so let's dance.
All right. What's the best inflation?
This one. I like it cool.
So it would be, ready? Watch this, Spencer. Would it be the disinflation?
Look at that bar in SPY when they released this.
Disinflation. In all seriousness, disinflation is probably the best inflation.
Dude, basically. Shout out to disinflation, right? Yes. So watch this. Ready? Are you ready for this? Correct me if I'm wrong. I don't know for sure, but correct me if I'm wrong. Deflation is when the asset prices are net falling. Disinflation is when they're rising at a slower rate. Do I have that right?
Nailed it.
Dude, this guy. Come on. Huh? Come on.
Give it to him. That was good, JC. That was good. Who said you never learn anything on the morning show?
Come on now. And then hold on. The one where I get confused is the Fairfield stagflation. What's going on there?
The Fairfield stagflation.
There's an employment situation happening, right?
That has to do with growth plus inflation.
Growth plus inflation. But
right.
There's not a job situation in the stag?
That's when both are bad at the same time. No growth and inflation.
Unemployment.
Oh, got it. So stagflation is the worst of all of them?
Yes.
Got it. All right. See? All right. So I knew something and I didn't know another. All right. 1 for 2 ain't bad.
Yes. I think that's the answer. Hey, so the news, though.
Look at us talking about economics, huh? Are you guys in the right show?
No, I think
in the chat. It's like, wait a minute, am I in the right room? What's going on here?
Well, let's quit while we're ahead. So the market over the course of the past 5 minutes getting a nice little bid here because the CPI came in at 0.2 ex food and energy month over month. Then they were expecting 0.3. So love it, right? That paves the way for those rate cuts that the market really, really want. Right?
Dude, Axie Infinity 20%.
Am I getting this right?
Dude, I go to you for questions like this, man. You know,
Steve's.
I'm guessing. I'm just guessing.
That's pretty much it. That's pretty much it.
I don't know anything about this stuff, dude. Dude, I'd make the worst Fed chairman.
No.
I'd make all of these guys like go into the room, be like, all right, now we're gonna look at charts. I don't know what y'all are talking about, but let's look at what's actually important. You know, because remember, these economists, not so much the Federal Reserve, but like people wonder, like, why are economists so bad? Like, why can they never get anything right? The reason is very simple, just so you guys know. The reason is because they purposely, like literally by design, ignore what is happening in favor of the things that may or may not have been happening over the last 6 to 12 months. In most cases, it's a variation of what actually took place. So they're using incomplete, very wrong information to make what do they call them? Prognostications about the future.
Yeah.
Right. Instead of seeing what's actually happening to make those prognostications about the future. Like it really just comes down to that, obviously, right?
I think that's a lot of it for sure. Yeah.
My 3-year-old, he had this thing like for like a week where like he would put a blanket over his head and then just start walking around. And then he would start bumping into things because he couldn't see where he was going. And then we kept telling him how stupid it was for him to be doing that. So stop doing that. You're going to keep hitting your face against the corner of the chair. And then, but like, of course he was hitting things. Like he was going the wrong directions because he wasn't seeing what was going on in front of him. Like he wasn't looking at it. So like my son was trying to be an economist at 3 years old. It's not good. Don't do that. Right.
Economic data today.
I didn't tell him like that, but in my head I thought it. I'm like, bro,
It's a good analogy.
It is. That's pretty funny though. And I'll bet he didn't stop doing it because you told him not to.
no, he stopped doing it because he had bumping his
probably
head
never
again.
heard
He's like,
it.
this is stupid.
Pretty
Why am I
bad
doing this? Yeah. You have to learn things on your own sometimes. You know, you know that, right? Sometimes you can tell you something 1,000 times, but until you actually learn it, which is why I think technical analysis kind of, appeals to me because, like, I'm not good at listening and paying attention, and like, my reading comprehension skills back in the day were like the worst thing I did. Like, it's not my thing. I have to see it. I got to see it. You can tell me 1,000 times, but let me show me,
Yeah.
So,
You have
listen, I got some good charts today.
Hey, you have any thoughts on the Powell?
The Powell?
Yeah.
I got some thoughts on the Harbaugh, but that's another story. The Powell,
Jim or John?
I'm good with either, to be honest. No, Jerome Powell, is he still, did he quit? I don't know. I was a little out of commission last night.
Still here.
Still there. All right.
Although it's actually not a crazy question, JC. Did he quit? Because in light of what's happened.
Dude, he seems like, I don't know, very frustrated. Didn't he tell that guy to fuck off in that meeting once, like last year, 2 years ago, which I thought was cool, but like a little angry,
Yeah. So they're going after him.
Now he's coming out like, oh, these guys are hating. They want me to, they're being bullies. I don't know. He just
Big beef.
like, I feel like I would be at the beach, maybe. I don't know. Like me, I'd be like, all right, you guys are idiots. I'm out. You know what I mean?
He's got a couple months to go, and then he could take a nice vacation. Then sure he
Doesn't
will.
it feel nice to say, fuck you, you idiots, I'm out? Doesn't it feel nice to be able to say that? And like, if you truly feel that way, be like, I'm spending all this time. None of these people are listening to me. See ya. I mean, I've done that myself. I can tell you it feels great.
Yeah. All right. Let's do a state of the markets.
All right.
Harbaugh to the Giants. I hope so.
Dude,
I think
you want to go
Giants
to New
fans
York? You know what
are
a headache it is to like have a high profile like that in New York City? Oh,
Somebody's got to do
bless.
the job, JC. I don't know.
It's a tough job, man. Comes with a lot of baggage there.
Well, I can figure it out.
Dude, you got the back page of the Post every day. Good
All right.
luck.
All right. Yeah.
All right, so the Dow Jones Industrial Average, Spencer is right. I love the fact that the first thing out of Spencer's mouth this morning was the Dow Jones Industrial Average. I'm like, who is this guy?
I just, nice big round numbers are fun. 150.
You like that?
50,000 for the one Dow Jones Industrial Average. So closed yesterday. Well, so not yet. So closed yesterday at 49,590, according to my data. 45,590.2. So, not far. 400 points. That's nothing. That's less than 1%. What is that? 70 basis points, 80 basis points, something like that. You guys, some math majors out there, calculate that. But it's not much. Like a decent day in the market. That's it. And what does that mean? So for you guys, since I'm the one that's always talking about the Dow, what does it mean for you guys? And then we'll get into the rest.
It's confirmation. I think it says a couple things. A, it's obviously always good, broader market confirmation for the averages to make new highs. You want to see NASDAQ 100 get there. But I think it also speaks to this rotation, the fact that it's there before some of the growth indexes, right? It talks about, that speaks to the kind of market that we're in versus the one that we were in for most of last year and the year before, one that's more dominated by value, cyclical stocks, economy stocks, things like industrials,
industrials making new all-time highs, Dow making all-time highs.
Materials.
Europe, I'm sorry?
Materials.
So you're seeing all of these groups, Qs and tech, not making new all-time highs, right? So, all right.
Yeah.
Spencer, and then why are you so interested in the Dow Jones Industrial Average?
I'm just reminded of, I think it was November of 24.
Yeah.
We got together, right? And we
that was
recorded,
the last time.
right? And we recorded a video, November 24, all about how the Dow was going to 50,000.
Wow.
And look at that. We made it, just about.
Yeah, it wasn't that far away. Like, people are like, oh my God, JC thinks the Dow's going to 50,000. And like, that's crazy. I'm like, is it really that crazy? It's really not that far. Like a few good years gets us there, and that's certainly what we've seen. So, all right. So S&P's flat this morning. Above 7,000, by the way. I think
Yep.
that's a big one. NASDAQ 100 futures, 25,988, just
Nice.
below 90, just below 26,000. Up a little bit this morning. 30-year bond futures up a little bit, pushing 116. Crude oil up 2% this morning, 60. So back above 60 for crude oil. I think that's a big one. Copper up a little bit, still above 6. I think that's a big one. Gold continuing to hang in there, 46.26, up a little bit this morning. Silver up another 3%, 87 for silver, 87 for silver, $87. That's 2.5 points to the upside today. With the VIX still at 15. I feel like every day I'm like, wow, how is the VIX still at 15? Bitcoin above 92,000, up 1,000 points. That's 1% to the upside. Nice move there today. You got Ethereum 31.41, up 1.6% on the day. You got Solana up 2.5% on the day, 142.60. With the total crypto market cap, Mr. Spencer Israel 3.11, 311. How do we feel?
I think the cryptos are making some nice progress, digging in here, carving out some good-looking tactical bases. Still want to, keep seeing more, but it's progress coming along. I think bonds are due for a little pop here. I think speculative growth stocks are now, a better place to be than the mega cap growth stocks. I think
Like the
stuff
bonds down here, huh?
What?
You like the bonds down here? You think bonds are going up and energy is going up at the same time? I'm not with you on that.
Yeah, I think you're gonna get a pop here. And
You're
Treasury.
saying you think that energy is going to break out and interest rates are going to fall?
Yeah, for now. Yeah. I don't, I'm
That's aggressive, Strazza.
looking a month,
I don't like that.
months out with a lot of these trades.
I don't like that.
I'm
You
gonna be
might
long.
right.
I'm gonna
I've been known to overthink the intermarket at times in
Yeah.
my life. I try
do
to.
that.
I feel like I'm proud that how far I've come, and I try not to overthink the intermarket here. But man, you guys, what about you guys in the chat? You guys in the chat, do you guys think that bonds and energy can move up together?
Why do we say this like it's so crazy though? Like why are we talking about it like it's such a crazy thing to happen? Is that right?
If energy's breaking out,
Precedent there for that?
that's I mean, I would imagine that bonds are breaking down in that environment. Am I crazy, guys? I'm the crazy one here.
You could just trade each chart individually. I'm a whole lot more interested in trading a bigger move in energy to the upside than maybe this little tactical base in TLT, right?
Can you throw up slide 1, please, guys? You're gonna love this one, Strazza.
I think interest rate sensitive stocks are suggesting that rates are going to come down as well.
Strazza, this chart is so for you. I saw it. This comes from our homie Macro Charts. Shout out to Macro Charts. Does amazing work. You know me. I don't give a shit what anybody out there thinks. There's a few people out there that I actually do care. They bring great insight. Like literally less than a handful of people that I actually care about.
Hey,
this is definitely one of them.
If you start pricing too many things in gold and silver, you start to feel crazy for being long precious metals. Be careful.
That is also true.
You start feeling crazy because there's a lot of this.
You start looking at value.
Yeah.
Right.
This is
generational buying opportunity.
It's more of what we know. I think that crude oil has just been absolutely crushed, and now you got on the other side of this formula here, this ratio chart, silver, which has been in a historic, absolutely epic bull run. So, is there definitely space for some mean reversion, or at least a counter trend move there, where crude oil moves higher, maybe silver and precious metals come down for sure? How sustained of a trend that'll be, I think becomes the question.
How about this? So for those who don't know what's happening here, this is a price, this is a ratio of the price of oil relative to the price of silver. Okay. And we are at levels that we've only seen a few times in history. Look at that in 1980. So that was the peak in precious metals, of course. And oil, really took off from there. You saw it in the late 60s, before that big inflation run throughout the 70s, right? Crude oil really dominated that. Man, I mean, listen, you know, in the 1980s it was less of an oil run and more. I guess it was a combination of the oil run and precious metals falling, but precious metals really got hurt there for a while. Um, Listen, I just think this really helps put things in perspective. You know, and I'm long energy stocks and I want to get long more energy stocks. I just don't necessarily agree that it's going to come with rising bond prices. I mean, maybe, listen, I'm down for the get down, whatever, right? If bonds are going up with energy stocks going up, I'm good with that. In fact, I prefer that, right? I think that would be incredible if that actually happens. Tech stocks are working, you know, interest rates are going down, people are able to make money moves. You know what I'm saying? Like, that'd be great. What I think is great and would be most convenient for me personally is not necessarily the way the market thinks, right? The market's going to do what it wants. Don't matter what JC wants, right? Anyway,
Yeah.
that's all.
ATX machine says, y'all want energy and oil to rally so bad. LOL. Yeah, I want the things I own to go up. Yeah.
Yeah, what's wrong with that? This is America.
Yeah, you got me.
Yeah.
And
shout out to the good old US of A.
And Joe from way up north says Solana's looking good here, and I agree, Joe. I agree. It's looking better than most out there.
I'd like crypto assets to go up too. I got plenty of those.
I want a lot of things to go up, dude.
Yeah, hell yeah. This is America, baby. We're trying to sell things at higher prices than where we buy them. Otherwise, what the hell are you doing here? Right? You know what I'm saying?
And look,
I got a good one.
We're not just sitting here hoping, you know, random assets go higher. XLE and a lot of its largest components are demonstrating that maybe they are ready to finally resolve these massive ranges. ExxonMobil.
And you know, I'll tell you another one. You know those consumer staples? I don't give a shit what happens to those because I don't own any. So it doesn't matter to me at all. Right?
Great point. I do have some Philip Morris
the Division 3 national championship game, you know, college football national championship game. Sure. I don't care who wins. I hope everybody is safe and nobody gets hurt and they have a great time, but I really don't care who wins, right? I don't even know who's in it.
Yeah, I get it. I'm with you.
Yeah. So yeah, I'd like to sell. I like to sell the things I own at higher prices, or borrow against them. Maybe I don't know. Either way.
Speaking of which, investors and traders will have the opportunity soon to sell ExxonMobil at higher prices than they ever have in the past.
Ooh,
that's called.
Okay, hold on. This is a big one here, guys. So you had Walmart getting added to the NASDAQ 100. I don't know if y'all heard. Big deal. So Walmart, I think, should be considered a consumer discretionary stock. And by the way, if Amazon was in the consumer discretionary index, this thing would look a hell of a lot better. I'll tell you that much. But despite Walmart not being in this at all, zero weighting in like the greatest stock ever, consumer discretionary hitting all-time highs on a market cap weighted basis, of which 43% is just Amazon and Tesla, but also on an equally weighted basis where it completely eliminates both Tesla and Amazon. The consumer discretionary index is also hitting new all-time highs.
I love it. Love to see it. It's not bearish at all. I'll tell you, even if you were to look at any of these consumer ratios, these risk appetite ratios heavily favoring offense right here, which is consumer discretionary. Stocks like Tesla and Amazon and cruise line operators and car manufacturers and home builders. These are big economy stocks, and it is a bullish signal for the broader market to see them basically reclaiming a leadership role out here.
Throw up the sentiment chart just to remind everybody that as consumer discretionary is hitting a new all-time high.
We were doing so well, and then he puts up this garbage. Gross.
I'm just
leaving.
Guys, listen, Strazza doesn't like it when I talk about humans and how humans behave, right? Like he thinks that like, you know, this is a simulation, right? And we're just playing along. No, that's not how this works. We're seeing what the humans are doing and thinking. And then we are trying to take advantage of the irrational behavior by these humans for our own selfish gains. That's what we're doing here. So here we're just looking at consumer sentiment. And what you're looking at is if you see the highs, this goes back 40 years, 45 years. If you look at those highs in 1999 and in 2019, everybody was confident. Everybody, oh my God, everything is great. Well, what happened after 1999? You had one of the greatest stock market crashes ever. What happened after 2019? You had 3 massive market corrections. You had one of the most historic crashes ever, if not the most historic crash ever. You had a full-fledged bear market. You had another reset last year. You had 3 major corrections in stocks immediately after consumer sentiment peaked in 2019. And then look at those lows, right? 2008, 2009, was that a good time to be buying stocks when everybody was angry? Hell yeah, it was, right? 2023, was that a good time to be buying stocks? Hell yeah, it was. Back in 1980, 1981, was that a good time to be buying stocks? Hell yeah, it was. That's all I'm saying. So then I got one more for you guys. Throw the smalls and mids. Here you go, Strazza. This one's for you. So the smalls and mids, very simple. I mean, I think they're playing catch up here. Right? They don't look terrible there, Strazza. Look at the smids, as you call them.
I think in some cases you would almost rather have the little ones here. There's a lot of speculative growth. Yeah, there's a lot of speculative growth, a lot of high beta stuff. This is where you get the runners. And this is a fun group of stocks right here.
Yeah, but in some cases they don't have options. In some cases they don't have options.
Yeah, but dude, you'd be surprised how many do. Like these little speculative growth, Arky, Kathy Wood stocks, they can be extremely liquid. More liquid than many large cap names. I gotta get another beer here. They think I'm drinking Modelo.
What are you drinking?
Modelo.
Modelo? You're not drinking Modelo. What are you drinking?
It's this can water.
Oh, I've been drinking the Colombe. It's like coffee in a can.
Oh, those are good, right?
I really like those. And they're on the promo program. I really like those a lot. I didn't think I would. I really do.
I've had them and they're delicious.
All right, we'll talk about it a little bit more on the recess. I'll bring it up when Perlman comes in. Can you throw up we got Kenny in the house. We'll save the next chart for afterwards. Why don't we bring in Mr. Kenny Glick?
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
And we're live.
There he is.
And we're live. What's up? It is a pretty interesting morning already. Getting started. JP Morgan short just covered, and some of the longs are enjoying themselves right now. AHMA for you lunatic friends out there. Something called Ambitious Enterprise Management. No idea, but we're in it, and we're loving it. Up to
sounds like a ring of strippers in Manhattan.
Absolutely. Ambitious Enterprise Management Company LLC, Mr. Jones. If you like it at $3, you got to love it here at 12 cents. Yeah.
Kenny, what I wanted to ask you was, on a scale of 1 to 10, how bored were you yesterday?
Oh my God, 10.5. Why? That was some boring trading.
Yeah, I'm just curious.
Yeah, I mean, there was nothing going on, but you know what? Boring is bullish. By the way, the joke was, do you really think the market's going down today because of whatever that news was? And you bought the open, we got the pop, and that was pretty much the whole day. But we're right back into the fun part. So let me just show you the chart because it's already happening.
Yeah,
let's get into this bad boy. So JP Morgan, right, my friends? Here it is. JP freaking Morgan. There's your trade, right? So again, pre-market activity, you better be really cautious. You don't got to go crazy with your size, but monster move. There's your reaction. 321, big fat whole number. Again, wonderful. Holds a big fat number. Breaking above VWAP. I wasn't even awake yet. So when I walk in, I see the big range that was formed. And then you got your finger of God right there, an extra one right there. And then blue line to orange line. So right there, we were telling our shorters to get the hell out at least 50% and look for it to bounce. Boom. There's the bounce. So now you got the bounce and the roll. I'm hoping now for it to get back into the upper zone so I could play that roll again. And if you're trading pre-market, usually by 9:15, we're all done. Just trying to get that blue to orange. Got paid right there. So now what we're going to look for is the stock to get back up here. And I expect that 321 to get tested again. So when the market opens up, I'm going to put on some lotto plays. Lotto plays, a little bit out of the money puts. So I'm looking at the 320 puts. If I can get them for 20, 30 cents, we're going to take a look at those at the open. But hopefully we get what I want. Little rally, in a roll, give us the finger of God, and smash this thing.
Wait.
back.
So you would short it above the blue line?
No, below the blue line, right here. As it rolls, you're a shorter here, 326, and then you get down to the orange line, and pretty much done.
Okay, so you're waiting for it to go above the blue line so that when it goes below, you can short it.
Right.
Okay.
See, I'm a little bit biased to the negative too. So
Okay.
I look for that confirmation. And again, if it turns into a long trade, I probably won't even participate. But speaking of long trades, Delta Airlines. So Delta
Yeah, but hold on.
Airlines.
No. I said, but in this case, because of the failed breakout that you saw in JP Morgan over the last week, the bias is to the downside, partly because of that. You're not just a negative Nancy.
Right. Correct. Yes. Yeah. Again, and somebody was pointing out that, it's hard to live 5 minutes. Listen, I'm looking at charts going back 5, 10, 20 years, my friends. I do stay focused on the day because that's where the magic happens.
You're such a Brian Shannon disciple, like that multiple time frame stuff and the VWAP stuff. I mean, like just, and I know that because Brian Shannon is a mentor to me. I've been watching his videos for 20 years. I just realized that the other day talking.
I know the YouTube videos, right?
05, I was watching his videos. We are now in 2026.
I know. It's incredible.
So shout out to Brian. We got to get him on the show, Spencer. What's taking so long? Get him on.
Yeah, most of my trades last year were coming off 3-year weekly charts. That's the Andy Dufresne. So, when you have, some of my best trades were Carvana and AMD because they just went dormant for years. And then they came out of that dormancy, which is the Andy Dufresne pattern. If you guys don't know what I'm talking about, come to the room. I'll explain more about Andy Dufresne. But that's where you find these monster breakouts. That's why Strazza has been on the same stocks I've been on these last couple of years because he's picking those coming out of the doldrums or those awful downtrends when they break. And for some reason now stocks come out of downtrends and they double and triple. That's the crazy part of the market right now. Like I said, I've never thought I'd be this excited about trading again in my life. But let's talk about Delta Airlines, right? This was an easier one. And again, I say easier because none of this is ever easy because your emotions are involved. Your fears involved.
Less difficult.
So it plummets. It goes sideways. You got your little foe. You got your show. And basically, you're waiting for the blue line break. So this was a pretty simple one because it was under the VWAP the whole morning so far. And then you got a pretty clean break through 67.50. Stock pops about $1. You take some money. It rolls over. You sell the rest. Bang. Delta Airlines. So far, so good. Got paid on the Delta Airlines. Got small little bit on the JP Morgan. But now the fun part, kids, for the smaller accounts, right? Some guys can't rock JP Morgan 200, 300 shares. You're afraid to trade pre-market. So now we're just going to wait for those same setups and trade them with options. And we're going to just use options on the Delta Airlines and the JP Morgan. So like with the JP Morgan, again, I like using VWAP as my confirmation bias. I do think we're going to see 320.
These are daily expiration.
Yes. Well, weeklies. I go always as closest to expiration at the money or slightly out of the money. So what I'm hoping for, and I don't know if I'm going to get what I want, I love to see them squeeze JP Morgan up to 328 and change. That'll make those 320s really, really cheap. That's why we're going to call them lotto plays. And then because we break 321, then you'll go back to that longer term chart. Here's that yearly. I'm just looking for, if it breaks down under there, you're looking right at this spot right there, which is the 317, the 317.50 area, which will be a nice payday. And that's where we're at.
Guys, well, you can trade with Kenny every day, but I wanted to invite everybody to happy hour in New York City on Thursday. Email in to Stock Market TV. Spencer, put in where they can email, and you'll provide the address and location, everything like that. But if you want to hang out, Thursday, Midtown Manhattan, 5 o'clock this Thursday. What day is that? Is that the 15th? 15th?
Yeah.
Yeah, that's going to be a lot of fun. We got a good crew. So if you're a morning show watcher, you want to hang out?
I'll be there, and I'm not drinking, so I don't know I don't know what kind of party this is going to be for me.
You're not drinking? I'll be drinking.
I'm trying. You could drink. You could have my drinks. Yeah. I don't know.
I'm gonna have some sushi beforehand, so I'll have some sake in me. Then by the time happy hour starts, forget about it. Anything can happen.
I know. I try so hard every January to not do anything. So my.
Oh, you're one of those?
Yeah.
Where's
Phil Perlman? You'll be proud. It's been 15 days. I started the year off with the flu, so those first 4 days I was in bed anyway. So it was easy to jump off.
Phil will tell you? Phil will tell you it's a bunch of bullshit because in February, if you go back to whatever it is that you were doing that you're trying to avoid in January, then it doesn't matter.
Right.
That's what
right.
he'll probably tell you. I don't
I'm
know
doing
for sure.
400 pull-ups. I'm running up a mountain today. Let's go. Ah!
Yeah, go eat some animal protein and take a walk.
17 eggs and a steak for breakfast. Let's go.
Dude, that dude don't eat breakfast.
I know. I just drink black coffee till noon. All right, guys. Be careful
All right,
out
Kenny.
there. All right. I
Adios.
hope we get what we want. Peace. I'll see you Thursday.
See you Thursday.
Yeah, man.
Little happy hour, no big deal. Remember the old days we used to do this? We'd all get together, bunch of friends, New York City, have some drinks, make bad decisions, and then like, I don't know, people stopped doing that as much, I feel like. So like, let's bring it back.
Just casually inviting half the internet to our happy hour. That's okay.
No, just the morning show watchers, because you guys are great.
Okay.
Right? Like, don't you want to hang out with more morning show? I mean, obviously, there's gonna be some
I
people
definitely
that-
do. I definitely do. But unlike you, I am mindful of the room capacity.
Guys, be nice to Spencer when you see him at the bar, right?
Let's bring on John Salama, and he was kind enough to send over like 8 or 9 charts, which I appreciate. So, and they're the kind of charts I think I saw a lot of ratio charts, John, or was I making that up? Let me see here. No, I was making that up. I don't know why I thought that. Anyway, what I appreciate is all of our guest charts look a little bit different. I like that. I like that no one has the same chart platform, chart settings, chart indicator. Everyone is different, and that's what makes it beautiful. And the right way is whatever works for you. So let's bring on John. We'll talk about his charts, talk about why they look the way they look, right? And then we'll see where it goes. All right?
All right, let's do it.
Cool.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Salama.
Good morning, fellas.
What's going on, my
How we
man?
doing?
It's going all right. How about you guys? Happy New Year. It's a little too late to say that, but
It's way too late.
Is it?
Oh, yes.
Yeah.
Yeah, but it's the first time we talk to
13.
each other and see each other, so it's all good. I don't
See,
have
that's what
a
I'm
problem
asking
with that. I'm not like Larry David.
That's what I was quoting. All right.
Now, if you start calling these things garden varieties and shit like that, then you're out of here, all right? Yeah, we don't. That's not how we talk around here. No,
True.
listen. Guys, if a lot of people know John. Been on the show a whole bunch, obviously. But if you don't know John, let me tell you selfishly what the value that he brings. Obviously, he's a good dude. You just want to hang out with him at a bar, which I'll be doing in a couple of days, so that's cool. But from a market standpoint, John constantly brings good ideas to the table. He brings perspective on something that maybe I hadn't noticed or paid enough attention to every time. And I know that there's a lot of work that goes behind that to come to those conclusions and find those ideas, right? So like for me, like that adds a lot of value, right? So I hope you guys can kind of, try to look at what he's saying today, like maybe a little bit through that lens, because that's how I see it and the value he adds to me. So shout out to John. Appreciate it. That's true. That's how I feel.
Love to hear it, man. Thank you. I appreciate that. Thank you for having me on. I love discussing ideas. Like you said, it's the best morning show. I'm looking forward. Like I said, I'm presenting Thursday at the CMT. I will drop by. If you guys stay super late, I will definitely bounce around.
Dude, there's like a jazz band playing like at 8. So I might be sticking around longer. Yeah.
Oh, cool. Then I'll be around. Nice.
All right,
Cool.
All right, what do you got?
All right. You can throw up whatever you want, Spencer. But yeah, as you do that, you can just start in any order.
Throw up the discretionary, because we were just talking about that. So this is consumer discretionary, with some bands. You got some bands. Are they of the Bollinger variety or maybe the Salama bands?
No, these are the Bollinger bands. And yeah, I mean, like you said, there's no Walmart in here. They basically transformed to being a tech company, but it's not involved in this. As we all know, XLY is the Amazon, Tesla, Home Depot basket, essentially. And Home Depot's been doing what it's been doing with the housing problem, but it'll be, surging. I got an ITB chart coming up, but Tesla's doing what it's doing, closing in on 450, and Amazon's, closing in on 250 as well. XRT is also looking like it's improving as well, but XLY basically, discretionary. People worry about consumer, rising unemployment, whatever, in so many years, but the charts are the charts. You look what's in front of you, and that thing has not been in any kind of trouble since basically we had the old 52-week lows in SPY back in April.
Let me ask you something, John, because Strazza loves you, right? Strazza's a huge fan of yours. And, when I bring up the consumer sentiment chart at all-time highs, he just wants nothing to do with it. He'll literally leave, like a child, right? But he loves you and what you have to say. How do you feel about it? Am I crazy by seeing this doing that? Equally weighted consumer discretionary also hitting all-time highs. Small cap and mid cap consumer discretionary looking great. Like you said, you're going to talk about the homies in a minute. The homies looking great. And then I see all-time lows in consumer sentiment. And I smile, and that makes me happy because that is the opposite of what's actually happening in the market. And I think that gives it legs higher. Am I crazy?
No, it's kind of like the magazine cover, confirmation. I don't disagree with that sentiment. People are a little bit lousy. Everyone's frozen in their job, stuck in the same home. I get it. But the stock market does what? Chase profits. And these companies having multiple expansion, higher profits and margins. It's not the same thing. It's related, but it's kind of like the right church, wrong pew. It's not exactly the same correlation.
And then so you got, I love the fact that you brought the EFA, right? Am I seeing that?
Yeah, you can pull that up next.
Before we get to the EFA, can you throw up the home construction? Because that's on that discretionary conversation. Then we'll get to the EFA. The home construction, part of the consumer discretionary, but Strazza's argued for a long time that it's more of like an industrial kind of play, but they haven't been trading with industrials like they have maybe in other parts of the cycle. They've been trading with discretionary, right?
Yeah, I thought this one has obviously peaked back on Labor Day week, and then of course the Trump comments with Blackstone and BlackRock and et cetera last week. But you have a rising 200-day moving average. It's been a little bit helter-skelter. I don't really know if I trust this. I think the real estate market's kind of a little bit messed up this year. I don't think people are going to be putting down massive down payments for homes if they think they're losing their jobs in 18 months. This group is, what is it, 30%, a third of it's D.R. Horton, Pulte Group, and Lennar Group. There's a housing shortage, so I like, the supply versus demand equation here, but I think it's running into some resistance here. I was interested in how much the rally has happened just in the past week. Off the comments, it's almost scratching a 70 RSI, which hasn't happened since the 52-week high. I'm taking a look out on it here. I also want to share this. You know the turtle trading from the 80s?
Yeah.
You do. So I just launched this in my prop trading account yesterday. So for those that don't know, Richard Dennis originated this. They had a whole thing with, I think his name was Aaron Eckhart and Richard Dennis, saying if you could trade, if you could teach someone to trade, or if it's, innate. And they basically, you can look up the rules for those that, aren't familiar, but you basically buy every 20-day high across markets. You get in every trend humanly possible, from orange juice to sugar to Microsoft, everything possible. Actually, that's a little bit cap correlation. You don't go into single names. He does ETFs, or then they did futures. I did it through ETFs 1X. And you sell at the 10-day low. That's your stop. And no hope, no forgiveness. You just get out, and then it sifts through, the weaker trends. So I did this yesterday. I bought SLV, and it bothered me because I was obviously chasing it at highs. I'm looking up right now. What's the top performer in my portfolio? Overbought SLV. Go figure. And the way that's genius to me is it's vol adjusted. So you do it through N units, if you remember that. So it's all ATO.
I never read the paper or anything like that. I mean, I know the stories, and I've met turtles, obviously, but like I don't know the details like you do.
So that's basically it. So you buy basically the 20-day high, you sell it at the 10-day low, and then it's vol adjusted through the average true range. So you don't buy as much silver as you do EFA, because obviously they move in different ways. So I bought yesterday silver.
Are you adjusting the position sizing at all, or like?
Yeah, so you have to adjust it with the 10-day lows and the 20-day highs. And then you have to see if you're getting to new positions or you're exiting. So yesterday, going back to what you had briefly.
Daily, on a daily close?
Yeah, if it touches the price, you get out. If it touches it, you're out. So yesterday I bought, because you were talking about energy before, I bought USO yesterday because oil put in a 20-day high. XLE did not. And I said, you know what? I'm just going to follow the rules. I also bought IWM, EFA, and FXI. And that way I don't have correlation caps as Richard Dennis confirmed. So I just wanted to go to that. And I think that's all.
I love that you're doing that, dude. That's so cool.
Yeah, I'm going to highlight and update on my YouTube show. People have had interest. And
write about it. I would love that. That'd be fantastic.
All right. Yeah, I'll document it. I've been.
How long has it been live? I
just literally bought the positions yesterday. It was a 2026 thing.
Got it. So it's a new thing. Dude, I love that.
I might start like a stack and track it.
I hope you guys are paying attention. Always working on new things, testing new things. I freaking love that, man.
One of the things that really led me to it is you can't just buy the Mag 7 anymore. And the way you avoid that high valuation, we can't have $4 trillion companies everywhere like Google. So folks are going to silver, uranium, other things, but it's a different valuation problem. You avoid the Mag 7. So the turtles really helped me get to this. And if you get out, you get out. It's very small losses. And then you're in these trends for years, potentially. All right, so that's pretty much it on the ITB. It's running into resistance here. I was impressed that it got above this 105 area. We'll see if it continues higher. I do love the resilience and the rising of the 200-day moving average. I'd like to see a little bit more trading above 50 RSI to let me know it's for real, but we'll see.
Throw up slide 11 there, the uranium. So let me ask you this. I think about this stuff a lot, right, to say the least. And, you know, if I ever catch myself potentially overthinking, like I used to do often 20 years ago, I would overthink the intermarket stuff. I read one John Murphy book. Next thing I know, I think I'm Mr. fucking macro guy, right?
Yeah.
So I've learned the lesson the hard way. Don't overthink the intermarket analysis. But so this is a chart of uranium, where you can look at a lot of energy out there and, you know, kind of starting to perk up and get on the new highs list and things like that. Do you think energy can go up, right? This is, you know, you bought oil, right? So you're positioned for that. Energy can go up and bonds go up too? Because I don't.
Never say never. I mean, I'm not banking.
Right.
I'm not banking on that, but the market is likes to make fools of us all. We were talking about FXI being uninvestable. What is it, like a year and a half ago? And I bought it yesterday on breakout. So likes to make fools of us all. I don't know. Bonds could go up with energy. They could both good. I don't look at it like that. I'm an intramarket analysis guy as well, but sometimes I look at the single chart in front of me. Uranium's obviously, we need it. We need it. This chart looks impeccable since what? Cinco de Mayo, basically, since it entered that first overbought registration since mid-May. And it kind of hasn't looked back, even getting within 2% of the super incline rising 200-day moving average. So you buy this on pullbacks. If you're lucky, you buy it at the 50-day. More likely, you're probably going to buy the 21-day exponential moving average, which is at 46.5 here, which is still a 10% decline from today.
Yeah, man. You know, I think about this. I mean, I would be great if bonds and energy can go up together. I mean, man, that would be great. But if that's happening, I don't think stocks are doing very well in that environment. You know, if energy and bonds are going up, you know, I guess maybe stocks can do well in that environment too. I don't know. It's just a tough, you know, listen, fortunately, I don't have to actually make that bet. It's just kind of thinking through things. And do I really want a bond position? Strazza's betting on rising bonds, but I'm not. I don't really have a bond position because it's been so boring, right? Which is fine. Boring is great. Like, I don't need a bond position, and we could just have, you know, stocks obviously love a boring bond market. It's like the most boring bond market like in history. What are stocks doing?
Yeah, I mean, you had a typical, what did the S&P do in 2025? 17-ish%. That's pretty great. Almost two times
bad.
Historical average. I do think, though, and I hate to do this, but these guys lost on Sunday. Very unfortunately. Don't say anything, Steve, please. And there's unfortunately going to be a new champion, right? There's going to be a little bit of regime shift. I think maybe that digital alpha peaked. I don't think it's done. Obviously, that's hubris to think tech is done. That's stupidity. But I do think, and I remember having this conversation with you guys, especially with Strazza, about value. Like, why would you buy Europe? It's got a lid on it. It's not going to go to the sky like some of the tech will. Look what's all the rage right now. European financial still, Germany, Canada. There's a lot more than US. I think the rest of the world is playing catch up, especially when you have the debasement trade too with the dollar. Everything else looks a lot better. So I'm not sure this year is just buy Qs on every pullback. You'll probably be fine. It's the GOAT of ETFs since inception is the Qs. But I do think this year you got to buy some things that will hurt if you drop it on your toe. Silver, palladium, all that stuff. That's where the alpha is. We're going from a digital alpha to a physical alpha. And before we were like, oh, Europe's so much value. That's where the money is right now. No one's just making Palantir $20 trillion company. It's not going to happen tomorrow. So I do think you have to have a barbell approach globally. And that's why I bought EFA, FXI. I was shocked when I didn't buy Qs or SPY. That's what I wanted. But I did small cap instead for the U.S. exposure.
You know, Salama, I try to pay attention, right? I try to pay attention to what the humans are doing and the humans are saying. And, you know, it was fascinating a few months ago. You had, you know, Ron DeSantis talking about how it's only a few companies that are making all the gains in the stock market. So, like, when the politicians are chiming in, like, pay attention. You know, at the same time, that podcast, the All In podcast with like some venture capitalists, it's like the number one podcast.
Yeah.
You know, they were also talking about how it was only a few names and the rest of the S&P 500 wasn't doing anything. And like that was happening at the same time. And I remember like going and counting one by one. I'm like, shit,
Mhm.
I mean, none of that is true at all.
No.
Market breadth is so amazing. And then what's really fascinating is now in hindsight, what's happened since then. Obviously, there was plenty of participation and those people were just lying to you or never even bothered to count. But more importantly, the stocks that they were saying were the only ones going up, right? Talking about the Qs, stopped going up. The Qs haven't made a new all-time high since October. That was the last time it made a new high,
That's
right?
right. Halloween week. Yeah.
And meanwhile, everything else that you mentioned is just you going down the list of things. Europe, Dow, small caps, mid caps, everybody's winning except the ones that they told you are the only ones working, which is hilarious, right?
You had one of the best charts. I gave you credit. I said this on my show the other day. You had the chart of the I was going to put it today, but I know you put it, so I did not. The QQQJ, is that the 101 through 200?
Yeah, throw up slide.
Is that making new all-time highs?
Oh, hell yeah, it is. Of course
So
it is. Throw up slide 32. Slide 32, it's there. Yeah, so this is 101 through 200. So it's like the next 100 after the QQQs, and they've been freaking ripping, man.
So that's confirming. So, okay, so look at October 29th, which is when the Qs peaked. This thing was not doing that. Was not doing that. They were going into those hyperscalers, right? Like literally Google, Amazon, just the Mag 7. Go back to your DeSantis comments. This thing's making new all-time highs this week, which speaks to the truth that you just can't have so many $4 trillion companies like Google, Apple, etc. It'll have its day in the sun again, like that whole group. But I love this chart right here, which is saying exactly like spread the wealth. The pizza pie got a little bit larger. Buy Europe, buy these, I don't even want to call them laggards, but the juniors, as you will, as you'll say here in tech, they're breaking out.
And you want to know something? The market cap for these groups, if you had to guess without looking, what do you think they are?
Nah, they're still big. What is it? More than 5 billion?
20 to 40.
Massive. That's not IWM. That's not the same exposure, but yeah, absolutely.
20 to 40.
I love that.
I'll tell you something else. For me, I look at market cap inflation, right? And for me, that 20 to 40 is like the upper end of mid caps, right?
Yeah. Okay.
It's kind of how I think about it. And then when you look at the mid cap index, it looks like that. Like the actual mid cap index, MDY, it looks like that, right? Breaking out now.
Maybe technology is the future, right? We've said this for years. And how do we invest? What do you want to invest in the future? You want to invest in technology. People don't want to pay huge valuations for Microsoft, Nvidia. They are still for Tesla, but they're buying what? Literally what you just showed on the chart, that future growth. That's awesome way to invest in the future. And it's hitting all-time highs as we speak. Qs will come back. I don't know when it happens. I think that's one of the reasons for crypto still being a little weak. I still think it's too software correlated, unfortunately. I think it's just not having its time yet. I think this is a very physical alpha, at least quarter.
I want to get to the precious metals now, and I want to talk about sort of the extended nature of that. But I do have one chart here that I want to just kind of circle back on. Guys, throw up the new slide 1 up there. Just to kind of circle back. You're talking about how people don't want to pay the valuations. Technology is the future. All these things. QQQJ. By the way, QQQJ has a lot more healthcare and a lot less technology, just an FYI. Here's the small cap technology index, right? And it looks a lot better than the Qs, right? So, by the way, QQQJ is still 37% technology. So it's not like it's massively lower, but
it's almost equally weighted. The QQQJ, I just look at the holders or the top holdings. It's eBay, Fiserv, and United Air, but it's all like 2% apiece.
Yeah.
Pretty good diversification.
Yeah, eBay's up there. So you're looking at small cap tech pushing up against all-time highs as well. Looking great, right? Looking like that QQQJ, to be honest, right?
Yeah.
Right? Looks a lot more like that than the XLK. All right. I wanted to talk about precious metals because how can we not? I mean, just an unbelievable year. And you and me are more old school, I feel like, where we understand prior, natural resource cycles and stuff like that. Maybe some newer members to the market and community and stuff like that might not have experienced that, and I get that. So, when I see like the GDX doubling and, the GDXJ doubling and platinum and palladium and silver and gold, I mean, silver's at freaking up 4%, 88.5 for silver. Like, wow.
Crazy.
Like, is this sustainable? Like, at what point? Like, you know what I'm saying? Like, I'm long. So, like,
me too.
And clearly I haven't been long enough, but like, I'm in. Like, I got real positions that have crazy gains. Like, my Buenaventura is up 7% today, right?
It's nuts. I know.
You know what I'm saying? So, like, I'm in, but like, when am I getting out? I mean, I have my targets, but I want to hear from you.
Yeah, I mean, trend is your friend until the end on this. I'm fully expecting, like I said, I got into silver, yesterday. Essentially, I did it also in the fall through options. Yesterday, I bought SLV, for the turtle trading system. I'm fully expecting one day to wake up and you see it down. You got down 8-9%. But for when I'm going to exit, I'll give it the same rules I give most others. It might be late, but I'll basically go until it's. You're looking at GDX here. I'll wait for the 200-day moving average until we get there, and then maybe like a week and a half, it stalls, it starts going south.
It's nowhere near there.
I know. So I'm long and strong, man.
But you got a lot of space between now and that 200-day.
Yeah. But this is the GDX. I mean, this just took out all-time highs. And folks love the catch-up trade.
But you don't want to raise that stop at all or anything, no?
There's some traffic there at the $70 level. I'll look at those October lows, or the area of the former breakout, but it's a little bit tight, maybe like 80, and I'll lighten up the position. Like I said, I'll have specific rules for the turtles.
You like to be a little more loosey-goosey than tight.
Well, look at the leash. It's got to have this thing. This thing was overbought from midsummer through October. This is like a boomer trade, speculative. We need it, an infrastructure to building for everything that's going to happen this year, data centers. You can't do AI without, copper and having the grids being built. They need silver and gold miners. I don't know if, Anglo Gold, Ashanti, and all these things should be doubling, tripling. But there's
Dude, how about Ja Rule and Ashanti getting back together? That's cool, right?
Oh yeah, I saw that.
Yeah,
what was the big song again 20 years ago? What was it?
There was a lot of grunting going on.
Yeah, what was that?
Yeah. There was a lot of so much grunting. How old are you, Salama?
39.
Yeah, so you're 4 years younger than me. So we were there. I was in college, you were in high school, but kind of doing the thing.
Yeah,
Let me ask you this, guys. Can you throw up slide 1? Let's bring it back to the inner market. You got these metals doing the thing. You got all the metals. If you drop it on your foot and it hurts, you buy it, kind of market. And dollar got smoked in the first half of the year and kind of went sideways after that. So it seems to me like these metals, they like down and sideways. I don't know anything, but I'm pretty sure that if they don't like up though, right? Down or sideways, okay. Up, no.
Yeah, let me just really fast back to the silver thing. The market is the wisest of all of us, right? We all agree with that. That we bow to the market, we fall in line.
The final arbiter.
Yeah. So this silver, all the metals, like the silver move this year is almost like third world country-esque. Like if there's crazy inflation, some sort of geopolitical, like something brand new, a little bit shocking, you go into metals. And then you had the Powell. I know, like I totally agree with Kenny, what he was saying. You bought the open yesterday based on that fear. VIX closed basically up like 0.5%. Nobody cares about the Fed losing independence, blah, blah, blah. But do you think, and this might be more cocktail talk, and we'll, do that Thursday night as well. Do you think maybe that's what the market was sniffing out? Like look at November, say Trump wins again, and he's talking about this stuff. There's rumors on CNBC. Scaramucci was saying that Trump wants to be the next Fed chair. And it's all this craziness, and nobody knows anything.
But like, do you think Scaramucci said that?
Yeah.
That's
Yeah, exactly. Do you think like that's what was being sniffed out in the past year? Like we're not talking about semis being in the top performer. We're not talking about, it's literally EFA, silver, gold miners. It's not, and Shield, defense tech, which is another chart I brought up. They're not really giving you warm fuzzies about, inflation going down, lower unemployment in the US. It seems like, is the world playing catch up? I'm coming back to this point. Or is there, a change of the guard and saying, hey, let's get into German assets, even though they don't own a lot of tech because we got so over our skis?
I think it's the nature of the market is rotation and participation, and different parts of the cycle behave in different ways. But I think that I think there's a lot. I think to answer your question, I think a lot of this could be based on this, right? So what happened? Dollar got smoked. International outperformed like crazy. Metals obviously did great. Sounds like a weaker market environment to me. Emerging markets, my Chinese stocks are ripping. I don't even know what these things do. They just retail. Yeah, okay, sure, right? Chinese retail. Who knows? Doesn't even matter, But if the dollar starts breaking out above 100, don't you think that's going to change the dynamic of international outperformance, metals in general? You think that's going to be a bummer on that trade and kind of change things around the other way?
when I play that multiple time frame, that stuff in my head I was just talking about, rotating from here, going across the pond, et cetera, et cetera. What comes back to me is I look at the VIX at the end of the day and I see it. I say, so it's 16. No, it's rotation. We're okay. If folks were leaving the U.S. and sell America trade and all that nonsense, I would see that a lot higher, and I'd be looking at exiting some trades. It's just saying Google's not going to 400 next week because it's had a hell of a rise. That's okay. Europe needs some trillion-dollar companies. They can't get them. Not SAP and Bear and all those things. They don't have them. So, like
What's
you said,
the biggest one in Europe?
Is it SAP or Bear? The people that make the med. It's. I'll look.
I'll tell you right now. The largest company in Europe is ASML.
Oh, Semi-Tech. There you go. You have to get one.
Yeah, ASML, AstraZeneca. Does that count? Does the United Kingdom count as Europe? SAP is 290 billion. That's nothing.
Yeah.
290 billion makes it the 290 billion doesn't even put it in the top 40. Isn't that crazy?
Yeah.
Their largest company is the same size as IBM, just for perspective, just to, we're very jaded in the United States in terms of market cap. Like, hey, $1 trillion here, $1 trillion. What's another trillion amongst friends?
That's exactly what you're saying about it's a microcosm of what you're showing with the QQQJ. You can't just bid up the Qs like trees don't grow to the sky. So you can't just keep bidding up the same thing. So you're looking at maybe SAP can be worth a little bit more in Shell.
Let me ask you one last question before we let you hop, more philosophically than anything else.
Ooh, love it.
You're a market technician guy, you're price based, like you're very, data driven, obviously, you're friends with Chris Kane. Like you're just like, right. Like you think, very, very logically. But let me ask you this, kind of just like bigger picture.
Yeah.
Do you think that there's like, people are talking about like multiples and earnings and companies and global debt and inflation, all these problems around the world and all these things, and they're focused on elections and the Trump and the whole thing. But at a certain point, where do we think about a scarcity of assets and just so few places for capital to be allocated to, and the idea that there's just more money than assets to put them in, therefore the prices of those assets are going up? Like, at what point is that a factor?
Maybe it's already become, and the companies are better than, like you said, you talked about the big crashes in 2000 and so on and so forth. It's not just a .com. You have some AI explosion, from some folks that have products, and some are a little bit pre-revenue, as we see the open here. And S&P on the on the cusp of new all-time highs yet again. You see that VIX under 16. But like you said, you got to own assets. I think going forward, like you said, we'll dip into the philosophical thing here. Like in 10 years, I think we're going to have, universal basic income, which gets rid of unemployment insurance. And I feel bad for those that don't own assets. You got to own something. I'm not saying just own Fartcoin. I know you're a big crypto punk guy. You got to own something.
Big for me. Small fish, big pond, small fish.
I got you. But I think you have to own assets. I really feel bad for those that don't. And it's not just, buy real estate. That locks you down and averages 4 to 6% a year because of scarcity, like you're saying. I would own some assets. And I like what people are doing with the QQQJ. I love that.
All right. Who's going to win the Super Bowl?
I said Seahawks against the Patriots about a month ago, and I'm going to stick with it. Seahawks over the Patriots.
Seahawks over the Patriots. And what's the best pizza in New York City? Manhattan.
I like the place on Bleecker Street Pizza.
And what's the best steak in New York City?
Keen's.
Wow. And you go, and what do you get there? Do you get the mutton or no?
No, like a ribeye or tomahawk. I'll usually see whatever. I'm on a print, whatever.
Yeah. All right. I've never not gotten the mutton there. I'm gonna go there and not get the mutton. And what about the Dow hitting 50,000? Does that matter or just noise?
It's going to do it. We're going higher. The stocks follow profits. People, like you said, that consumer sentiment thing, people can be so miserable, get laid off today, whatever. It does not matter. Stocks follow profits. These companies are making more money. I know a lot of people freaked out yesterday over Claude work. A lot of people said like thousands of startups got killed. This thing was all over my feed. I don't know if you saw it, but it basically is like 5 coworkers in one. Basically, you get a junior software engineer and everything for like $18 a month or something. And we'll see where the dislocation is going to be in several years. I know we have little kids. I don't know where they're going to be when they grow up, but so is the same thing when you were growing up. So there's new jobs that will be created. It always is better to be optimistic. You sound smart when you're pessimistic, but you're gonna have less money in your wallet.
No doubt. John Salama, ladies and gentlemen, give him a follow. Does great work. Can't wait to have you back. Thank you, John.
Trading Trends on YouTube with John Salama. I saw someone ask for what the website is. Go to Trading Trends with John Salama on YouTube. And if you're in New York City, like I said, I'll be at the CMT on Thursday. I'd love to hang out with y'all.
No, I look forward to it. Drop the link to Salama's YouTube channel, Spencer, if you can, and we'll put it in the show notes. Thank you, John.
All right.
Adios. Sweet. All right. Well, John coming to happy hour. Spencer coming to happy hour. Spencer's buying. Drinks on Spencer.
Oh. You know what? That's not fair. I shouldn't have to pay if I don't get to pick the food. If I'm going to pay, I get to pick the food.
I'm gonna shame you.
This is so not fair.
We're going on a yacht in Miami with a bunch of people after spending the whole day working, and we're going out. And in the menu, there's all kinds of great stuff and sushi and all kinds of beef. Spencer's ordering the chicken fingers. The chicken fingers. You understand that I have chicken fingers coming out of my ears? I got 3 kids. There are so many chicken fingers at restaurants in my house. It's ridiculous. Some of them are shaped like dinosaurs. Like, I can't even make this stuff up. We're ordering chicken fingers, Spencer.
Hand up. I am a man of the people.
I don't trust you.
The people like chicken tenders. Okay.
Not on a yacht in Miami for the sunset.
Got to give the people what they want.
Nobody wants that, Spencer. Bring up Perlman. He'll tell you. Chicken fingers.
Hard disagree, but okay.
I scratched out chicken fingers and got more sushi.
We'll leave it at that.
Pearl Dog.
What's up, fellas?
Dude, dude's ordering chicken fingers for the yacht. Can you believe
chicken
this guy?
fingers is not adult food. It's not adult food. Like Pez, those little sour fish. It's not adult food. Adult food.
And why is it on the menu,
fish,
man? Boom.
Because sometimes
vegetables.
there's kids. Sometimes they bring their kids to the yacht. That's why it's on the menu.
It's not adult food, dude.
Tell him, Perlman.
Chicken fingers. If you have a 3-year-old kid, if you have a 5-year-old kid, and they're eating chicken fingers, and you grab one of their chicken fingers, that's okay. But if you go someplace and you order chicken fingers, that's not adult food. That's not.
You're acting like I didn't also select like shrimp and other seafood.
Dude, Perlman, this guy didn't get the escargot so that he can get the chicken fingers.
Oh my God, it's garlic and butter, JC. We've all had it a million times.
Skip the escargot for the chicken fingers. Are you kidding me?
Louise.
Double the
escargot is fantastic.
Yeah.
It's adult food. It's delicious. It's French. It has
so
butter.
Healthy. So healthy.
It's butter.
Unbelievably healthy. There's nothing more healthy that you could eat.
Dude, from the ocean, you know how many nutrients are in that little snail? You know how many, it's one of the greatest things you could possibly put in your body. Tell him, Perlman.
It's got everything you need.
Phil, I want to talk about complexity bias.
Yes, complexity bias.
Yes.
So here's the thing. Humans have all types of biases. We're emotional animals and we don't even realize it. And everybody's familiar with confirmation bias and availability, heuristics, and all of that stuff. But nobody ever talks about complexity bias. And I found a few articles about it, but I found no formal research. I even did a survey of biases in heuristics, and I found no formal research on complexity bias. So, but I know it exists because I see it around me all the time. I see it every day, and I see it obscuring performance in markets, and that's why I'm bringing it today. And so here's how I'm defining complexity bias. Humans have a tendency to make things more complicated than they really are. And, if you ever see a chart that has too many lines on it, They got the fans and they got the this and they got the that. And God help these the cycle. What do you call those? I can't think of the name of it, but there's just so much complexity out there.
Kondratiev cycle, the 68-year cycle. What is that one?
1, 2, 3, 4, 5.
Oh, the Elliott waves.
Elliott waivers are the kings of the complexity bias.
They would argue that it's all math and
a
it makes it
second
simpler.
of a third wave, or a fifth of a fourth wave, or the seventh of the ninth wave. You know, it's hilarious. But anyway, though, here's what you do. So there's many reasons. I'm not going to really go into the reasons. There's a million different reasons why. Ego, defense mechanism. You want to look like you're cool in front of other people. You learned how to think in too complex a way. Whoever taught you how to think. And you have these learned behaviors and rules that are ridiculous. Maybe you have cognitive limitations. Maybe you're not that bright and you just over complicate things. Here's how you combat. So people do it in trading all the time and it crushes them. It kills them. I see it all the time. I see it with other people who are trying to invest for the long term, who then all of a sudden become market timers. They get scared. They become market timers. They sell and they never get back in. That's my risk as a long-term, very, very very simple investor. I just want to buy ETFs. I want to buy them all the time. I want to keep enough cash that I can sleep at night. I want to avoid the latest tip. And so it's hard. Sometimes my ego gets tempted, right? I have access to all of this incredible information and I watch winners go by sometimes and I have to deal with it myself. But my strategy is my strategy. I know who I am. So this is what you do. If you are suffering from complexity bias, I know you're out there watching and you're doing it. You get away from your own strategy because you're making things too complicated. You're overthinking things. If you're trying to global macro, if you're trying to game insane global politics or economics or what the number is going to be tomorrow or the next day, forget it. Here's what you do. Number one, you have to figure out who you are. You have to figure out what you're doing here. That's number one. That's the first thing, most important thing. Figure out who you are and what you're doing here. Number one. Number two, you have to figure out what problem you're trying to solve. What's your problem? Are you trying to make money? Are you trying to earn income? You're a trader, you're a professional trader, and you want to have P&L every week, every month, every year consistently? Great. If you're like me and you're just, kind of coasting and creating income and want to be consistent and passive over a long period of time, that's who I am. Number one, who you are. Number two, what's the problem you want to solve? Hey, I just want long-term income. Hey, I just want to make money, week after week consistently. That's it. You want to have a simplicity bias. You want to bias towards simplicity to counter complexity bias.
No, I like it. And, in other facets of life, like you kind of drill it on me and others as well, like when I'm like, oh, I got to send you my recipe for my oxtails and da-da-da-da. And you're like, yeah, I'm just going to throw a steak on the grill.
I tend to do that.
And it's like, oh, there's this new like workout and da-da-da. Yeah. Let's go for a walk. Yeah.
Every day on the streams, I see new ways of looking at the markets and new ideas about how to be healthy and new metrics and new supplements and new exercises that you can do. And, I think there is some value in that. Maybe if you're super, super advanced, if you're an elite runner, if you're running a marathon in under 2 hours and 30 minutes, yes, maybe there's some real importance in your heart, understanding your heart rate variability or taking the right supplements or whatever. But I think for 98% of the people out there who are not elite And the same thing goes for the market participation too. If you're running $3 billion at an elite quant hedge fund in Connecticut, yes, maybe, having using lots of complexity to solve a very small problem that provides you with one extra half ounce of alpha might make a big difference. You know what I mean? I mean, a basis point, if you're running $1 billion, is a lot of money, but for the most part, if you're not super elite, then stupid simplicity is an incredible plan. You throw a steak on the grill. I love the idea of making oxtail. Every time you send me a photo, I'm like, oh man, I gotta make that. And then I go to Costco and I see oxtails, and I'm like, oh man, I gotta do that. I really want to do it. But I just
So the first thing you want to do, because you want to marinate it for 2 to 3 days. So get them and marinate them, and then call me and I'll tell you what else to get. So
Okay.
Get the oxtails, get cayenne pepper and maybe like a chili oil, and then just put it in a bag and just throw it in the fridge.
So a tiny bit of complexity for fun on the weekends, maybe it's fine. Maybe just for a little flavor, like a little oxtail.
Oh, it's more than fun. It's all business, Perlman. It's not just fun. No fun. This isn't just games. This is oxtails. This is rabo encendido, bro.
Yeah, salt, pepper, good piece of meat, good piece of fish, grill.
Dude, my Tuscan chicken is so freaking good. It makes me sick. It's so good. Perlman, a great question in the chat. You don't do yoga. Do you do some yoga and you don't talk about it as much? I know your wife does a lot of yoga.
I do micro yoga. Like my garland pose is a motherfucker.
Yeah.
Yeah. Like I can garland pose, 10, 15 minutes straight. I do it every single morning. I do some other stuff too, but I don't do it extensively. I don't do hours and hours of yoga. In the summer, sometimes I do outdoor yoga sessions. My wife is really into yoga and she shows me stuff. So I do micro yoga, garland pose and downward dog, but mostly garland pose. Every morning, 10, 15 minutes, I'm squatting. I squat throughout the day. It's great for your hips. It's great for runners. It's great for your flexibility. I go down there, get down like this, move around, stretch up like this, do the whole thing. I could do that all day long. But I don't really do that much yoga. I get it a little bit vicariously from my wife. I'll do some poses. I do a couple balances too, the tree and all that kind of stuff here and there. But I just do it micro. I just do it like in between calls or after a run or before a run or stuff like sometimes early in the morning. But 3-5 minutes of it, not maybe 10 minutes of it, not full sessions.
I'm really good at the shavasana.
Great for you, by the way. Every person that does yoga I know is thriving. So I completely recommend it. It's just not totally my thing. Sorry.
No, the corpse pose, the shavasana, that's the one I'm best at.
Beautiful.
Yeah.
Okay.
Those simple relaxation poses are incredible for relaxation, meditation. Beautiful. Balance.
Spencer, you doing a lot of yoga these days or what, bro?
No, but like Phil, my wife is more into the yoga and the stretching and the yeah, she does it. But I watch her from the couch, as she does it. So
I got one quick bonus for you. Make your wife happy and love her with everything you have. Make your wife happy. If you have a good woman, make your wife happy and love her with everything you have. Simple as that.
Or husband, whatever.
Or if you're out there and you're a woman, absolutely. Same thing.
All right, let's get out of here. Strazza has been waiting in the wings. He's going to go live in a few minutes for the open bar. The bar is open this morning, everyone. I don't know what stocks are being served at the open bar, but the bar is open. So coming up next is the open bar with Steve Strazza. If you're watching us on YouTube, this stream you're watching will end and the open bar will automatically load. It'll also be live on stockmarkettv.com and on X, as is everything we do. So thank you, everyone, for watching. Thank you, everyone in the chat. Thank you to Phil and John and Kenny. We'll be back tomorrow. I'll see everyone for the open bar in a few minutes. We have that. We have what day is today? Today's Tuesday. Yeah, we have the open bar, and Gold Rush is going live today as well at 2:00, and that's what we got. So everyone, go make some money. Thanks for watching. Drop us a like. We appreciate all the likes, all the engagement, and we'll see you.
YOLO responsibly.
I can't take no loss.